The people that tell me I'm not gonna do it or I shouldn't do it, they're not the one that has to put the work in to achieve my goal. I'm the one that has
Mm,
to put the work in to achieve my goal. So who are you to tell me if I'm the one that has to put all the work in, right? So people need to stop listening to other people. And with social media and all this stuff, it's easy to get caught up in it and it can really impact your confidence and your determination. And so you got to be locked in.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hello and welcome to the Real Estate Pros podcast. I'm Cody Crabb with Investor Fuel. Today I'm joined by Zach Haptonstall, CEO and co-founder of Rise 48 Equity, vertically integrated multifamily investment firm. He's got over 11,000 units across Phoenix, Dallas, and North Carolina. We are going to talk about building a multifamily investment company, what experience people are seeing in the current market cycle, and just his tips for getting started. So Zach, thank you so much for joining us today.
Yeah, thanks so much, Cody. Really appreciate you having me on, man. Looking forward to hopefully providing some value for the listeners here and diving into all types of different topics.
Yeah, let's get into it. So I love starting out with kind of the origin story. How did you first get into multifamily real estate?
Yeah, so quick background. I mean, I was born and raised here in Phoenix, Arizona, which is where I live now. It's where our corporate headquarters are. So I just grew up in like a lower middle class family. You know, my dad was in construction. My mom was like an HR employee for a company. And so just traditional, I was taught go to school, get good grades, get a degree, all that. And so I played high school and football. I played football in high school, and then I went and played Division II college football. And I really wanted to be an NFL player. And I realized, okay, this isn't going to happen. I'm not big enough or good enough to do that. And so my next best option was like, okay, I want to be a sports reporter. And so I went to journalism school. I was a live news anchor, sports reporter for Arizona PBS. I hosted a show on Fox Sports Network for a bit, which was cool experience, being on live TV. And the idea was cooler than the reality is what happened, Cody. And I was like, wow, this isn't really what I wanted to do. You can't make any money doing this. And I was working, full time nights and weekends while I was going to college to pay for my school. I had to take out a bunch of student loans. And
Mm,
so I was really focused. I didn't get a penny from anybody, ever. And so I had to focus on how do I eat? How do I, provide my housing, et cetera. So I got the degree and I realized, okay, I don't want to go into journalism. I need to make money. Okay. And so I, I got into healthcare marketing when I was 21 years old, just from like, somebody I had known from my previous job while I was in college. And so I had heard you can make good money in healthcare marketing. I needed to pay off my student debt. My car was always breaking down. So I needed to get a new car. I needed to pay my rent. And so I went into healthcare marketing, working for a hospice organization of all things. And my job was wake up in the morning, drive all around Phoenix and just walk in cold to hospitals, doctors' offices, assisted livings, et cetera, and build relationships with physicians, social workers, nurses. When they had somebody who needed hospice care, they call me. I meet with the family, educate them, get them signed up. So it sounds weird, Cody, but hospice is a very competitive and lucrative private business
yeah,
industry. It's all
yeah.
regulated, and reimbursed by Medicare. Phoenix is the number one market in the country. And so long story short, I was doing that and I was doing really well. I was probably the top marketer in the market. And by the time I'm 23, I'm making 150K a year. I bought a house when I was 23. So I'm making more money than both my parents combined had ever made by the time I'm 23 doing this marketing job.
See, and this right here is where I would be like, done, goal achieved. I have money.
Yeah.
I'm good now. So I'm interested in what happens next.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah, no, you're right, Cody, because that was my goal. When I was 18, I remember I read one of Dave Ramsey's books, okay, all about saving your money, being frugal, killing debt. And so I was like, I need to kill this student debt. That was my #1 target. And then I bought a car and I was like, I need to kill this car loan. So I was grinding and grinding. I did that for about 4 or 5 years or so. And by the time I'm 26, I'm making like over 200K a year. I got my MBA. I went to night school to get my MBA, pay that off cash, paid off all my student debt, had no debt besides my house. And I was the director of marketing and earned a little bit of sweat equity in this company. And I was completely miserable because I'm just grinding, in this industry that I don't really care about anymore. I'm not passionate about it. I was dominating the space, frankly. And so I just felt like I hit a ceiling and I wasn't happy. I didn't know what to do.
Yeah.
But I was like, I don't even have any time to figure out what I want to do. And this is not fulfilling, just chasing a commission check every single month. So end of 2017, it was December of 2017. I'm like, you know what? I'm probably going to need to quit so that I can figure this out. And so I quit that next month in January of 18. I quit my job. I sold a little bit of equity I had in that company. And so I had between relentlessly following the Dave Ramsey program for about 5 years and getting a little bump of equity in that company, I had about $300,000 of cash, which I felt was like a ton of money. And I had to just save that money every month for so long. It was like, that was like my treasure. And I was like, okay, I want to create passive income somehow through real estate. And I did not know anybody in real estate. Okay. I'm not exaggerating. I have no family money. I have no connections whatsoever. I was just like, I want to learn about real estate. And I started listening to podcasts and things like that. So at first I was going to flip houses. So I created a little LLC and I'm looking into flipping houses. And then I realized that's very transactional. That's kind of what I was just doing with the hospice marketing. It's like, you only make money if you make a transaction. So then I started listening to podcasts, reading books, going to meetups and going to conferences and learning about the concept of investing. And at first, Cody, I was thinking about, how do I make my 300K stretch as far as possible? I was only thinking of buying my own property. And I was really getting interested in mobile home parks. And so I actually cold called over 90 mobile home park owners in the Phoenix area to try to buy their little park on a seller carry loan using my cash. And most of them didn't answer. A few did answer, weren't interested. But I started doing the math and I was like, wait, what if I do spend all my $300,000 of cash? I buy this mobile home park. I make $2,000 or $3,000 a month maybe of cash flow. Then what do? I'm broke and I'm not really making a ton of cash flow. Like it was enough to cover my expenses at that time because I was just a single young guy. But I was like, there's got to be more to this.
Then what?
So, yeah, then what, right? So this was like 3 or 4 months in, and I'm like, man, this sucks. Like I'm just waking up every morning, going from making fat paychecks to not knowing what you're supposed to do. You kind of start losing your confidence and your identity. And I really learned about the whole concept of syndication and how I can leverage my time and energy and leverage other people's money to create like a mutually beneficial partnership. And so that's like, okay, I'm going to raise money and I'll earn sweat equity doing that. And then I just need to figure out my asset class. So I looked at mobile home parks, self-storage, other things, and ultimately decided on multifamily just from, listening to podcasts, kind of like yours, reading books, going to meetups, stuff like that. Cause I just felt like I could scale multifamily. Cause at this point I was like, you know what, if I'm going to do something, I'm going to go all in. I'm going to make this huge and I want to be enormous. I'm going to build a massive company. I'm going to basically take my cash and I'm going to think of it as like a missile. I'm going to launch this missile to make the biggest impact. And so I set out on multifamily. Long story short, I grinded, it took 10 months to find the first deal. It was a 36 unit, $3.5 million deal. I needed to raise 1.4 million. I had 165K left of cash. I put 160 into that deal. So literally all my money, I had $5,000 left. I met a couple of my partners now, Bikron and Robert, all in that journey. And we just bootstrapped that thing together and put it together. And so it took 14 months to close on the first deal from when I quit the job. And the first 3 years, that was 2018. So we bought the first deal in February of 19. 2018, 2019, 2020, I made $0. By the end of 2020, we owned 6 deals, about 60 million. We had to just freaking scratch and claw to get that.
Yeah, no kidding.
Um, I ended up going back into hospice marketing. Um, about 18 months into that journey, I was dead broke and I was, paying the minimum payment on my credit card to not go into default. My now wife, then girlfriend, was paying our bills. And so it was September of 2019. I had to go back and get a job as the president of a hospice company. So I was working full time, running the real estate company at night. My partner Bikram was working full time as an accountant. So we were running everything on at night on Zoom.
Wow.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
But by the end of 2020, we started selling our first deals. Okay. So no money the first 3 years. And then we started selling these deals. We started getting flush with liquidity. And we took all those proceeds and we reinvested it into the company to start the property management company, the construction company, and we became vertically integrated in 2021. Then we started really taking off. Okay. So in 2021 alone, we bought 16 deals, 560 million. 2022, we bought another 16 deals, 860 million. So literally in the first 3 years, we bought 6 deals, 60 million, made no money. And then the next 24 months, we bought about $1.3 billion worth of real estate. Right. So it just kind of really took off and we were building out infrastructure, and building out this company along the way, building out all the departments, things like that, which was really cool. That was all in Phoenix. At the end of 22, we decided to expand to Dallas so we could give our investors more diversification. We were the number one buyer in the country in 2023 in Dallas, Fort Worth. So we were buying a lot of off-market distressed deals. And then in 2024, we expanded to North Carolina. And so right now we own and manage 6,000 units in Phoenix, 3,500 units in Dallas, Fort Worth, and 1,500 units in North Carolina. We ended up selling the first 11 deals. Today we have about 350 full-time W-2 employees. We've raised about 1.2 billion of like cash equity from investors, and we have about $2.5 billion worth of real estate that we currently own and manage. And so that's kind of how we got to where we are today. So it's been about 8 years now. Feels like it's been like 20 years, but
Yeah.
it's
Well,
been
and
a fun journey.
man, what a graph. That chart must look like a vertical line at some points because that's just wild. That growth is just unbelievable. Um, and I think it's great that you kind of saw the point where you were like, I need to do something else for a minute. We need to make sure we're like, you're taking risks, but at a point where you are, you're doing it in a smart way. I think that's it. Not every risk has to be all in. And I think that it's important to highlight that because people think risk and they think risk everything when I don't think you always need to do that.
Yeah, you need to have some way to. My whole philosophy during that time was I just need to stay above water, right? I always knew I could go back and get a job at any point, right? So it's like you do feel the stress and anxiety of running out of money, but it's like I like during that time I got a consulting job, I got a part-time job. I was doing different things. Then I had to go back and get a full-time salaried big boy job running a company of 50 employees as the president, just to keep this, quote unquote dream alive. So yeah, I mean it's really just staying above water and continuing to push forward and develop your business or your goal. And you will pop at some point as long as you don't quit.
Yeah, I love that. So when you say vertically integrated, what does that actually mean in practice for how you operate new deals and things?
Yeah, good question. So most of our peers or competitors in our space, they'll basically raise money from investors and they'll buy an apartment building and then they'll use a third party company to manage that property, like a third party property management. And they'll use a third party company to do the construction management. And we did that ourselves, Cody, the first few years. We were using third-party property management and third-party construction management because we listened to all the podcasts and we heard you just raise the money, buy the deal, and you sit back and collect the cash flow. The management company does everything else. And from the very beginning, we quickly realized that's not the case. Okay. They're not staying on schedule or on budget with renovations. I'm at the first property we bought, the 36 unit. I'm out there chewing out vendors, constantly having to oversee everything. And we realized after a couple of years, okay, this is not going to work. In order for us to achieve our goals and achieve the results that we're trying to get for our investors, we need to have full control, okay, over everything. Like for example, one of the problems of having third party management is like staffing. Like if you've got a property and you don't like the property manager or the leasing agent or the maintenance guy is not keeping the curb appeal or the deferred maintenance in check, and you want to fire them, you can't fire them because you don't own that company. So you have to complain to your third party manager company that you want some new staff, and they'll just give you the runaround. And so we want to be able to replace people and terminate them if they're not performing. We want to be able to align incentives and bonuses with the goals of that property and get the right people in the right seat at those assets and have full control so that we don't want to be making excuses to our investors blaming it on third parties. So that's why in 2020 we started our own property management company, which is what it means to be vertically integrated, which means that every single employee on site of every property is our full-time W-2 employee, from the maintenance technician to the leasing agent to the property manager. We also started our own construction management company, which means that we are the general contractor and we are basically overseeing all the construction management.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
So we are basically sourcing and managing third-party subcontractors. So we'll use third-party labor to do the in-unit work and the renovations, but our W-2 employees at Rise 48 Construction are overseeing and managing these people every day. In addition to that, we realized we need to take control of our supply chain. Okay, we needed to control costs from a supply perspective and from a labor perspective. Because when we were using third parties, they'll give us a budget or a bid, and we're creating an entire pro forma business plan around that budget. And then they come over that. They come in over that. Like, guys, what are you doing? This screwed up our entire business plan because you came over on labor and materials. And so we said we have to have full control over that. So what we did is we started to source all of our own materials directly wholesale from overseas manufacturers. So we're purchasing all of our flooring, countertops, appliances, cabinets, everything directly wholesale at fixed pricing. So we have contracts with our suppliers that we are paying them a flat price per unit. If you have a 200 unit apartment building, we're paying them a flat price per unit. Doesn't matter if it's a 1-bedroom, 2-bedroom, 3-bedroom, for the lifetime of the project. And for our labor, our third-party construction companies, we're paying them a flat price per unit for labor. So our all-in cost per unit for labor and materials to the renovations is fixed and it cannot change. So that was very important for us to gain full control over property management and construction so that we can really get better results, which allows us to grow faster and get the benefits of economies of scale. Once we get the benefits of economies of scale, it all kind of feeds the flywheel, Cody. Basically, it allows us to raise more money, buy more deals, get better performance. And once we have bigger economies of scale, I can negotiate better pricing with my labor and materials and really just benefit everything overall. So that's kind of the vertical integration component was key for us, especially what would happen. And I don't know if we'll go into this on this podcast, but especially what would happen in 2022 and 2023 when interest rates would skyrocket, the market crushed with new supply of housing the last few years. And most of our competitors, I shouldn't say most, but I would say a lot of them that are using third-party management are just gone. They're just bankrupt because they don't have the control and the alignment with that management and the day-to-day operation. So anyways, long-winded answer, but that's what vertical integration means.
Gotcha. Well, and see, this leads me perfectly into my next question, which is, so What mistakes do you see investors making when they're relying too much on third-party management? Because it sounds like you're avoiding a lot of headaches by doing this yourself.
Yeah, no, it's a good question. So, I mean, I am trying to weigh this myself still, right? There is a balance between taking everything in house and outsourcing certain things, right? In any business, right? There's different components. And so, for example, we started an HVAC company in the beginning of 2025, and we did all our own HVAC. And this company did over 3.5 million of revenue in the first 12 months, 35% profit margin, very profitable company. We made over $1 million in our first 12 months, but it was distracting a couple of our key employees who needed to oversee our property management and our operations. And so in the beginning of 2026, January 1st, I said, you know what? We need to be laser focused on our core business. And I collapsed the HVAC company. And I said, just lay off all the people. We're not doing HVAC. And they're like, why? We're making a ton of money. I said, it's distracting from our core business. Use third party. Okay. So it depends on which component it is of the business. For multifamily apartments and property management, in my opinion, it is critical to have that vertical integration, that full control. And it's not easy. It's a pain in the ass to have your own property management company, right? It's a lot. I tell people, like, a lot of like groups that raise money and they're like investment companies say you haven't really started a real business in multifamily until you start your own property management company, because that's when it gets very complex and there's a lot going into it with staffing
Yeah.
and everything that you have to navigate. But it has made all the difference for us. And so I think that from a if you want to be a general partner, like you want to do what we do, you're not going to be able to start out right out of the gates with your own property management company because you're not going to have the scale to support that, or the revenue. So you're going to probably need to use third party initially. But I think it all depends on what your goals are, right? Like, you need to have concrete goals. Our goals were to be massive and be one of the biggest, most dominant real estate companies the world has ever seen. And we realized that we're not going to be able to achieve that scale using third parties. If your goal is to just, manage if you want to have 500, 1,000 units, well, you should probably use third party, because it's not really till you get to about 2,000 units, Cody, that it makes sense to have your own management company. We burned through about $800,000 the first 10 months before we broke even. And we got over that 2,000 unit point.
Mm.
So it really just depends. And then if you're a passive investor, when you are evaluating a sponsor to invest with, I'm not saying that you necessarily need to rule them out because they don't have their own property management company. You just need to understand, what is their infrastructure? Like, what markets are they in? Who are the local people in that market? Do they have staff there? Are the principals there? Who is the management company that they're using if it's not their own? And what is the reality is that for a lot of companies, it might be better if they use a third party because they're not good at starting their own management company and they can't execute, right? So
Right.
we
Yeah.
hired a bunch of smart, experienced people who have run management companies, and that's how we did ours. You know what I mean? And so, but so I think it just depends. But overall, if you can execute, I think it makes a big difference to have control.
Absolutely. And like, I think you answered it perfectly. I think it very much depends on your specific situation, what your goals are. I mean, like you said, the HVAC system with the HVAC business was making you guys a lot of money, but you were like, but it's not what we want to do. So let's focus elsewhere. I love that. Um, so you mentioned earlier that investors really need to like understand where we are in the market cycle right now. How would you explain the current multifamily market environment from what you're seeing? And it's especially interesting because you're in different locations here, so you could maybe get a wider perspective than some people.
Yeah, it's a great question, Cody. I mean, you and I are recording this right now in March of 2026, and there's been a lot of friction and challenges in multifamily the last few years. So as many people know, it was exactly just about 4 years ago now that the Fed started the most aggressive interest rate hikes ever, really since the 1980s. It was unprecedented. They started aggressively increasing interest rates in March of 2022 through 2023. That was a big challenge, for multifamily. There's been a lot of distress. And then the bigger challenge has been all the new supply of apartments that have hit the market. And so what happened, Cody, is that really from like 2018 through the first half of 2022, you had a lot of people leaving these more, politically progressive states like Washington State, California, New York, New Jersey, Illinois, Chicago. They're leaving these places and they're migrating to Sunbelt states, right? Like Nevada, Arizona, Texas,
Trust
Florida,
me,
the
I'm from
Carolinas.
Utah. I live in Salt Lake City. I am very much aware. Yeah, this is very
Yeah,
much something I've seen. Yeah,
you've seen the extra traffic, right?
yeah,
You know, and
yeah.
same here in Phoenix. And so we all know that there's this, especially post COVID, right? Especially post COVID, even more people are leaving those places and they're moving to these Sun Belt markets. And so what happened is you have all these new people coming here. You have all these new jobs coming to these Sun Belt markets. So it creates a huge need for additional housing. So apartment developers, and we're not developers, we buy existing deals, but developers start building and developing new apartments in these growth markets like crazy, okay, to meet this need. Well, you got to remember it takes about 3 years for these apartments to actually get what's called delivered, meaning that they have been built, all the zoning and everything, and entitlements are done, and now they can start leasing those up and people moving in. So what happened is, especially in 23, 24, really 24, 25, and 26, is when these growth Sunbelt states are just getting hammered with new supply. All these new apartments are coming online. And what people have to realize, Cody, is that the cost to build those new apartments is extremely high. Okay. It's been very expensive to build new apartments. So the only way that you can justify building new apartments is you have to command extremely high rents for the math to work on those projects. That means that they're building class A luxury apartments. They're not building, B class affordable housing type apartments. They're building class A luxury housing where your average rent is anywhere between at least $3,000 to $5,000 a month. The demographic that can afford that is very small. And when interest rates were low and inflation was low, it wasn't really a problem. But what happened is you had these two things happen in parallel. If people remember, 23 through 22, 23, 24, at one point inflation hits 8 or 9%. Right. And then it comes down to 3% a year, whatever, but it didn't actually go down. You went up 8 or 9%. And then the next year you kept going up 3%.
Yeah.
Okay. So the last 4 or 5 years, it's probably gone up 12 to 15% inflation. Groceries, gas, et cetera. All these things got a lot more expensive. Interest rates are much higher. And now you have more housing than you have more supply of housing than you have demand. So this is economics 101 in these growth markets. And so what's happened is that these class A luxury apartments are having to give at least 2 to 3 months free rent to lease these things up. And there's been a trickle down effect. We only own what's called B class housing. Okay. So we own and manage 11,000 units right now. And our average rent is between $1,200 to $1,300 a month.
Mm-hmm.
This is where the majority of the population lives. This is where the bulk of the demographic lives. It's more affordable. But even our class of housing has had to give a month free on several of these assets the last couple of years. And you went from growth markets like Phoenix, Dallas, Florida, Carolinas, had at least 5 to 10% plus positive organic rent growth for several years in a row. Well, Phoenix and Dallas have had negative organic rent growth now for 3 consecutive years because of all this oversupply of housing. Okay. And so that's really, so the combination of oversupply and elevated interest rates have drastically compressed values the last 2 to 3 years, especially. That's created a good buying opportunity. We've been buying several distressed deals. So we've been buying deals at literally 30 to 50% discounted basis on a price per unit perspective, just straight purchase price from where they were at peak pricing in 2022. Okay, so there are good deals out there still to buy. And we believe that we are truly at the bottom of the market right now as far as pricing goes. And here's the reason why, Cody, is that I mentioned interest rates skyrocket in 2022. Well, what happened is since the second half of 22, there has been little to no new development, no new building of apartments in these growth markets because those elevated interest rates blew up a lot of these construction loans, right? And people didn't start new ones because there was too much supply. The interest rates didn't make sense. So what you've had now is the last few years, you've had little to no new development of apartments. And the good thing about these growth markets like Phoenix, Dallas, the North Carolina markets like Charlotte, Raleigh, Greensboro, people have not stopped moving to these markets. These are still top 5, top 10 markets in the country for population growth and what we call in-migration, meaning people are moving from one state to these places. I saw data, it was 2025 U-Haul data showed that the top 3 markets for people taking a U-Haul to move were Dallas, Phoenix, and Charlotte. You know what I mean? Which is crazy.
Yeah.
And so anyways, my point is people are still moving to these markets. There's still companies moving here, creating new jobs. And what the data is showing is that because we haven't been building apartments the last few years, the next 3 to 4 years, we're actually going to have a shortage of housing. So that economics 101 dynamic, supply and demand, is going to flip. there's going to be more demand than there is supply. And as real estate investors, that will actually benefit us. So that the
Yeah.
data is showing that the bulk of this new supply of housing should get absorbed, meaning that they can lease it up by the end of 2026. And they're projecting positive organic rent growth and, burning off of these significant concessions, which will help increase the values of these assets in 27, 28, 29. So, we're telling investors that, where we're at in the market cycle right now is we think now is the best time to buy. And we probably have another, maybe 8 to 12 month window here where once that supply gets absorbed, values will go up. Here's the other thing, Cody. Supply is a big driver of value. The other thing is interest rates, right? So when interest rates go up, the values of these apartment buildings go down. And the inverse is true. When interest rates go down, values go up. Well, it's widely expected that there should be significant interest rate cuts the next 24 to 36 months. They've already started cutting those rates. You've seen inflation come down.
Yeah.
Obviously now we have this war with Iran, which creates a lot of volatility. But when you look at the next 36 months, overall rates should be coming down over that period. And as rates come down, values will go up. So if we can buy deals right now at massive discounts from the peak of the pricing, and then we should have tailwinds of supply getting absorbed, positive rent growth, interest rates going down, that should drive up the values where we can make really strong investments. And so we're looking for deals. It's hard to find them right now because nobody is selling unless they have to,
Yeah.
because they'll be selling at low values. We haven't sold a deal since 2022 because it hasn't made sense to do so.
Wow.
We've been buying a lot of deals at significantly discounted pricing, but that's kind of where we're at right now in the market cycle. And I think it's important for people to understand those dynamics.
Yeah, wow, that is a extremely clear explanation, and to the point where it's like spooky that you're literally describing exactly the situation I'm seeing around me, and you weren't even talking about where I live. Like, it's exactly right. I think that's very clear. I think a lot of people are going to really benefit from that explanation there. So yeah, I mean, you said one of the opportunities that people have right now is to kind of use that window that's starting to open up. I think that's great. Thank you for calling that out. So people on the ground, obviously you're operating at a much different scale than a lot of the just starting out real estate investors are. But I do want to highlight that your story completely shows that it's possible for someone to kind of start and from like square one and go all the way to where you're at. So I'd love to ask you, like, what mistakes do you see investors making right now in the market, or in this environment rather?
Yeah. No, it's a great question, Cody. I am not perfect by any means. I made a ton of mistakes, and I've kind of followed the true quote unquote entrepreneurial journey. I've been broke and had to grind through so much adversity. And so I think one of the biggest keys is you need to stay laser focused on your core business. And I've been guilty of this myself, right? Where you get shiny object syndrome, or you start to face adversity and you pivot to something else. And I'm seeing a lot of people do that right now. People that started when I started that I know. And they've gone through the adversity and the challenges of multifamily. And some of them have lost investor money, or they've been foreclosed on, which is tough. That's never fun. And then they'll rebrand and they'll start something new. And even if you haven't lost any investor money, when I first started, Cody, what my natural development, to be honest with you, is like I heard that mobile home parks are cash cows. Mobile home parks are just print cash. Go buy mobile home parks. I was like, oh man, nobody knows about these mobile home parks. I heard they're cash cows. I start looking at them, and the cap rates are just as compressed on mobile home parks as multifamily. Everybody's known about mobile home parks for a long time. And I was like, I got all discouraged. I was like, oh man, I missed the boat. It's saturated. Then I learned about self-storage. I was like, okay, self-storage. That's what I got to get into. That's where the competition's not at. I started looking at all the pricing and the numbers. I was like, this is extremely competitive and saturated too. And I started realizing, I was like, you know what? You can't try to just avoid the competition, because if something is very competitive, there's a reason for that. It's because you can make money doing it, and you can be successful. And so you had to shift my mindset to where
Yeah.
they have to compete with me.
Oh, I
Okay, they have
love
to
that.
compete with me. I'm not competing with them. You got to compete with me. I'm entering the market. I'm the disruptor, and I'm going to make it happen. And I don't care what you say or what any of the haters say. You block out all the noise. And I've got this goal, and I'm going to stick to it. I think when you start getting that shiny object syndrome, where you just start hopping around because you're not seeing that tangible evidence of your progress on your main core thing that you wanted to do, And again, maybe you have a good reason to shift. Okay, that's fine, but don't keep shifting because you're not finding success. You have to go deep, not wide, right? And I just gave you the example earlier of how, I created the HVAC company because I was like, we need to have diversified income and revenue. This is easy money for us to make, and it was very profitable. We made over $1 million net profit in the first 12 months, but at what cost? I mean, is that kind of what's the opportunity cost? Are we now getting distracted from our core business where we could be growing and scaling that and be making more money in the long run doing that? And so I think it's just very important to stay laser focused, lock in on a goal, and just keep grinding. And then one other thing I tell people too, Cody, is that when you are pursuing a goal and it's a big goal, you're going to have naysayers. Okay. And these could be people who are your family, your significant other. Maybe they're trying to protect you. Maybe they're secretly jealous. Maybe you're making them feel bad about themselves because you're pursuing a big goal that they don't have the guts to pursue. And so they're going to try to discourage you. Maybe they're your competitor and you're making faster progress than them. And you make them feel bad about themselves. So they're going to start talking crap. And so my biggest advice is, do not listen to people who don't have your best interests in mind. Okay. And also don't take advice from people who haven't done what you're trying to do.
Yeah. Yeah.
Because I made that mistake early on. I would try to take on these quote unquote mentors who I tell them what I want to do, and they haven't achieved as big of goals as I have. And they start trying to discourage, like, oh no, Zach, you shouldn't do that. Like, you need to start small. You need to start doing this and that, because that's what they did. Right. And so if I achieve my goal, it makes them look bad and feel bad.
Yeah.
Well, screw those people. You don't need to listen to them. Okay. Because the philosophy I've had, Cody, and this will be my last point on this question, is the people that tell me I'm not going to do it or I shouldn't do it, they're not the one that has to put the work in to achieve my goal. I'm the one that has to put the work in to achieve my goal. So who are you to tell me if I'm the one that has to put all the work in, right? So people need to stop listening to other people. And with social media and all this stuff, it's easy to get caught up in it, and it can really impact your confidence and your determination. And so you got to be locked in, block out the noise, and stay laser focused and just focus on the results. Don't focus on the talk, because I think so many people talk these days with social media and everything,
Yeah.
and all the haters and anonymous blogs. Just be locked in.
Yeah, love that. It's the same principle as, like, if you see someone selling a course on how to do something and they're like, you can make millions of dollars. Then why aren't you doing that instead of selling this course then? Right.
Exactly.
Yeah.
Exactly. And if they actually have achieved it, great. But if they haven't, it's because they tried it and they couldn't do it, and now they're trying to sell.
Exactly.
I know a ton of people like that. Like, I know actual individuals like a name that do that right now.
Yeah.
So I get it.
Yeah. So I think that's so true. We need to focus on, like, who has actually achieved our goals and how did they get there, not like just how theoretically do people do it.
Yeah. 100%.
I think that's so great. That's that little snippet right there. Oh man, that's worth, this whole episode is worth it just for that. So Zach, this has really been great. I really appreciate you kind of breaking down your business and also kind of how the market's working. I think that was a really great explanation. If people want to learn more about Rise 48 and what you're doing, where can they do that online?
Yeah, thanks so much, Cody. Really appreciate having me, man. You can go to rise48equity.com, RISE48equity.com, and you can set up a call with our team if you want to learn more about how you can partner with us. You can email me, Zach, Z-A-C-H, at rise48equity.com as well, if you ever want to talk about partnering or anything like that. And love to chat with anybody.
Thanks so much, Zach. This has been a real pleasure. You've given us a lot to think about. And thank you to all you listeners that have joined us for this episode. If you liked it, please make sure to share it and subscribe to our channel. And we will see you on the next episode of the Real Estate Pros Podcast.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.